Alright, what's up guys, and welcome to now the fourth video of where I talk about my strategy. And what we will be talking about today is this and this. So yeah, this is called, or this is what I call a swing failure pattern, and it's actually a very powerful thing. And just as we can beautifully see, our RSI is already marking a bullish divergence here, as we talked in the last video. Like bullish divergence, price makes a lower low here, lower low, but then RSI makes a higher low, and that's a bullish divergence. So first of all, what is a swing failure pattern? So we need two things. We need a swing point. The bigger the swing point, or the bigger the swing low or swing high, the better. Like the further price moves away from it, the better. The longer the wick, the better. And then the second thing we need is for price to trade below that swing point again, but only very briefly, and then reclaim it again, force immediately. That is what we call a swing failure pattern. So we have a swing low, then we try to trade below it, but we fail at trading above it, and then we move away from it quickly, like with a long wick and then big candles moving away. So that's the fundamental anatomy of a swing failure pattern. And you can trade this on TradingView already very beautifully, like the bigger the swing point and then the quicker the reaction away from it, the better. But something we can also use very beautifully in this case is order flow. So just a quick look. This is Solana, like this is today. So if we look at the order flow, I will explain more in depth like about this platform. It's ExoCharts. It's an order flow charting platform, and basically just a quick introduction. So what we have here is a footprint chart. We can see where people bought and sold in the past, and we can also see them in real time, buying and selling. So here we can see these numbers are changing, and this is people buying and selling in real time. So go back to our pattern. So on the left, just quickly how these candles work. Every candle has a left part and a right part. So on the left we see the sellers. For example, in this candle there are a lot of numbers, big numbers on the left, and the candle overall is red. So those are sellers. On the right we have the buyers. Over here we can notice that there's more numbers on the right, higher numbers on the right than on the left, which means we have more buyers here. Okay, so far to the footprint. Exactly. So this is the same thing as we had on TradingView. So what we can do is that we can mark this swing low, and then we can check what happened below this swing low. So below this swing low, we got some selling, like here we had 11k sellers, 14k sellers, and then on the next candle, these people reduced, like we had 6k sellers, 1.2k, which is very little, and then 8.3k. So putting this into perspective, we had a first low, or a first move down, where in this candle we had 17k, 24k, 18k, 23k, 34k sellers, which is a lot. Then in the next candle, some buyers came in, like 23k, 8.4k, 16k, but we still had quite strong selling with 19k, 16k, 14k. So now we look at the new low that was made, and we want to see one of two things with the swing failure pattern. We want to either see a lot of selling and then price snaps back above all of those sellers. That would be called trapped sellers, which is a very powerful concept, but I will be talking about it more in the future. Like I will make a designated video for it. Or the second scenario we want to see is less sellers, and then price trades away from them immediately. So the second scenario is what we got here. Market tries to move below the swing point, but there's not really strong selling interest anymore. Price or the market doesn't want to go lower. Like sellers ran out of steam. 34k, 23k, 19k, 16k to now 11k, 14k, and then as we go even lower, 8k, 1k, 1k, 6K. So overall, the selling pressure is reducing. And yeah, this is a beautiful example of how to trade a swing failure pattern. Yeah. And yeah, quick recap, very simple thing. Again, we have a swing point, price trades below it very briefly, but then snaps back above and is able to move away. And this alone we can already use on TradingView, but if we have access to an order flow platform, oopsie doopsie, we can use the order flow as confirmation. A lot of selling, even less selling, price only very briefly trades below and then moves away. Yeah, that's it so far for swing failure patterns. And as always, if you guys have any questions or any suggestions, let me know in the comments, and I'll see you guys in the next video.